Good afternoon, Professor. Today I'll be presenting on SCP analysis of Ryanair, focusing on its market structure, conduct, and performance. Our analysis evaluates how Ryanair operates in the European aviation market, its strategies for maintaining competitive advantage, and how these strategies contribute to its overall performance. I'll also explore how Ryanair practices aligns with the principle of managerial economics, specifically in terms of cost leadership, market behavior, and profitability. So this is our flow of presentation for today. We will start with giving a brief introduction about the European aviation market structure and then moving on to how Ryanair conducts itself in the aviation market. Followed by the performance analysis where we discuss the financial and operational performance of Ryanair throughout these years, and we'll conclude by stating few of the risks and challenges which Ryanair faces and how it has strongly positioned itself for a for expanding its services to the next level. So to begin with, let's look at the European aviation market. The European airline industry is characterized by an oligopoly with major players like Ryanair, EasyJet, and Wizz Air dominating the low-cost segment. Ryanair holds the largest market share at around 31%, with EasyJet at 15%. This concentration of power is typical in oligopolistic market, as we know, where a few firms control the majority of the market. Now coming to the European aviation structure, the market structure. The market concentration can be measured using the Herfindahl-Hirschman index, which for Ryanair segment is 1286, indicating moderate market consolidation. This means that while competition exists, the top firms still hold significant influence, making price competition less intense. In terms of barriers to entry, high capital requirements, limited airport slots, and strict regulatory standards create significant challenges for new entrants. These barriers reinforce Ryanair's market dominance. So for low cost carriers like Ryanair, the demand for their ticket tends to be more elastic compared to full service airlines. This means that Ryanair can attract a large number of price sensitive customers by lowering its ticket prices. Also, Ryanair's low cost structure allows it to keep fares low without significantly reducing the profitability because of its high operational efficiency and ancillary revenue streams, which provide sufficient revenue to cover cost. The airline's ability to manipulate ticket prices in response to demand shifts, particularly during off-peak periods or in the face of competition, is a clear application of price elasticity here. So, for example, during times of excess capacity, Ryanair can lower fares and increase demand, thus filling more seats without drastically impacting its bottom line. So now let's visit Ryanair's conduct in this market. Um, Ryanair's core strategy is based on cost leadership, which it achieves through low-cost operations and operational efficiency. The company's business model revolves around minimizing costs from its choice of secondary airports to minimal in-flight services provided to passengers. By keeping the operational expenses low, Ryanair can offer highly competitive fares. Moreover, Ryanair has diversified its revenue streams by focusing not only on ticket sales but also on ancillary services such as baggage fares, priority boarding, and in-flight purchases. This allows Ryanair to maintain profitability despite its low fare, which is a classic example of how firms in oligopoly can balance cost minimization with revenue maximization. Ryanair, as a leading low-cost carrier in Europe, has significant market power within the budget airline segment. While it operates in an oligopolistic market alongside EasyJet and Wizz Air, Ryanair still has the power to influence price in certain markets, particularly where it has a dominant share of routes, or when it operates at secondary airports where the competition is less intense. So Ryanair's brand also plays a critical role in increasing its market power. Through its distinctive marketing strategy and strong online presence, the airline coming to the business model, Ryanair has successfully leveraged economies of scale in several ways, allowing it to reduce its per unit cost and increase profitability. Firstly, by operating a standardized fleet of Boeing 737 aircrafts, Ryanair significantly lowered its per unit cost related to maintenance, trainings, and spare parts. This standardization simplifies the procurement process and leads to a better operational efficiency, as the company can optimize training programs, reduce maintenance costs, and purchase parts in bulk at discounted rates. Moreover, Ryanair's large network of routes across Europe enables it to spread fixed costs such as airport fees, marketing expenses, and infrastructure costs across a large number of flights and passengers. The airline's ability to achieve high aircraft utilization rates and maintain quick turnaround times also increases its capacity without the need to invest in additional aircraft, further reducing the average cost per flight. Um, Finally, Ryanair benefits from its bargaining power with suppliers due to the size of its operations. For example, it has secured favorable terms with aircraft manufacturers and fuel suppliers, enabling it to secure aircraft at lower cost and hedge fuel prices effectively. This ensures that Ryanair can continue to offer low cost flights while maintaining profitability. So here we can see how Ryanair's social media account handles online grievances and comments by its fellow consumers. So in addition to its operational efficiency, Ryanair's brand conduct plays a significant role in its success. The airline is known for its bold marketing, including humorous and sometimes sarcastic social media interactions, as we can read over here. This unconventional approach helps build a strong online presence and engages a younger and digital savvy audience. Ryanair's approach to the customer engagement is direct application of behavioral economics. By using humor and relatability, Ryanair is able to connect with its customer in a way that traditional and more formal airlines do not. This strengthens its brand loyalty and drives word of mouth publicity, making it a unique player in the highly competitive airline industry. Now moving forward to the performance analysis of Ryanair. Let's look at the Ryanair's financial performance. In FY24, Ryanair reported a 13.44 euro billion in revenue, a 34 increase from its previous year. Despite external challenges such as geopolitical instabilities and pandemic lingering effect, Ryanair has proven resilient. The airline focuses on ancillary revenues, which accounted for 40% of the total revenue and is a major factor in its financial success. Ryanair's ability to lower the prices without sacrificing profitability demonstrates its understanding of price elasticity. By keeping costs low and diversifying revenue through ancillary services, the airline can capture more sensitive customers while maintaining profitability. Operationally, Ryanair remains the most efficient airline in Europe. The company operates high-frequency flights, achieving quick turnaround times and maximizing flight utilization. For instance, Ryanair's Boeing 737-8200 is a game-changer aircraft. Not only that it reduces the fuel consumption, but also contributes to lower emission, aligning with the sustainability goals. Ryanair's financial performance has been impressive. The airline has managed to maintain high profit margins through the efficient cost management, especially in terms of unit cost excluding fuel, which are significantly lower than its competitors. For example, EasyJet and Lufthansa Airlines have unit cost around 79 euros and 164 euros respectively, while Ryanair cost stands much lower at just 34 euros per passenger. Now coming on to the market position and growth of Ryanair. In terms of market position, Ryanair is expanding its footprint with operations in 37 countries and 234 airports. It continues to grow. Its target is to carry 300 million passengers annually by financial year 34. 2034, which highlights its ambitious growth strategy. This growth is underpinned by fleet modernization, with Ryanair acquiring the Boeing MAX 10 aircrafts to further reduce fuel consumption and enhance the operational efficiency. Ryanair's dominant position in low-cost segment gives it significant market power. Through its brand loyalty and pricing strategy, it is able to maintain its lead in oligopolistic market even when faced with competitors like EasyJet Jet and Wizz Air. Ryanair's standardized fleet and large network allow it to reduce cost per unit as its scales of operation increases. This combined with efficient operation means Ryanair can offer low fare while achieving high profit margin on ancillary services. Ryanair is also investing heavily in innovation and sustainability. The airline has embraced AI-powered dynamic pricing and mobile booking platforms, enhancing both operational efficiency and customer experience. The use of AI-powered dynamic pricing allows Ryanair to adjust fares based on demand, maximizing revenue per seat while still filling seats. A clear example of how applying price elasticity to enhance profitability. Ryanair's commitment to sustainability through investment in fuel-efficient aircraft and use of sustainable aviation fuels reflects the company's ability to adapt to external market forces. These initiatives not only reduce Ryanair's environmental impact but also help the airline maintain a competitive edge in the industry, increasingly concerned with corporate social responsibility. Ryanair's improved sustainability ratings reflects its leadership in adopting green technologies, demonstrating how firms in an oligopoly can also lead in environmental stewardship. So while Ryanair's focus on low fares benefits consumers, providing affordable travel options, it also faces challenges. Geopolitical instability, fuel prices volatility, and economic uncertainty pose risk to the airline's future performance. Additionally, fleet expansion delays and fluctuating fuel prices could impact its operational efficiency. Despite these risks, Ryanair continued to prioritize consumer welfare, delivering affordable pricing and high customer satisfaction, along with enhanced protection through agreements with approved online travel agency vendors. Its strong commitment to the customer service alongside competitive pricing ensures Ryanair remains a top choice for budget conscious travelers. So to conclude the presentation, Ryanair has successfully leveraged its position in the European aviation market by adopting a cost leadership strategy and diversifying its revenue sources through ancillary services, cargo, and advertising. Operating in oligopolistic market, Ryanair maintains a competitive edge through high operational efficiency, modernizing fleets, and a distinctive, engaging brand presence. Despite challenges such as geopolitical instability, fuel prices volatility, and economic uncertainty, Ryanair has shown impressive financial resilience with significant growth in profitability and customer satisfaction. The airline is well positioned for continued expansion, supported strategic fleet upgrades, and a focus on sustainability through extreme risk may pose ongoing challenges to its future performance.